Hello guys, hope you're all doing well. This is going to be the first video for beginners, and what this video is about is how I mark out horizontal support and resistance. You can see here that I've typed tweezer tops and tweezer bottoms. That's because when you're looking for these levels, this is about what they're going to look like. They're going to look like tweezers that you would use for your eyebrows per se, but the candles will have these little wicks and they have an impression of tweezers. Now, sometimes these wicks will be longer, sometimes they'll be shorter, sometimes they'll be even, sometimes they will barely be there at all. Okay, what I've typed out though is just something that I'm going to read through to just help you get a general understanding of the support and resistance, and just some information you need to know about them. So here we go. When marking out support levels, we look for a red candle followed by a green candle. As you see here, I'll give you an example of a red candle followed by a green candle. And what we're going to be using to mark these levels is a horizontal ray. So in this case, that would be a support level. And I place this horizontal ray, which you can find right here, horizontal ray. I place it at the close of the candle, right at the body where it closed, the red candle, and where the green candle opened. Okay, now when looking for resistance levels, we look for a green candle followed by a red candle. So in this case, the example that I have here, we would mark the horizontal ray right at the body where the close was of this green candle and where the open was of this red candle, and that would give us our resistance. Okay, so once a level is tapped, the strength of that level weakens. So if you have a level, like, I'll give you a quick example here. If you have a level here, and let's just say that this is a monthly level, okay? If price is working its way down and then it taps the level, gets a reaction from the level, and let's say that this tap was a daily candle, a weekly candle. Well, the second time it comes back around, you're not going to expect it to give this reaction that it initially gave. You're going to expect the reaction to be a little bit weaker, right? And then if it comes back down again, you're going to expect the reaction to be a little bit weaker until it eventually falls through the level. So the first touch of a level is always the strongest, as I've typed out here. The first touch of an SR level, support/resistance level, will always give the best reaction. Okay, and again, you always want to use this in confluence. So I look for support resistance levels on the monthly, weekly, and daily time frames. Now, if you choose to go any lower, say 12-hour, 8-hour, 6-hour, 4-hour, that's your choice. But I personally just use them on the monthly, the weekly, and the daily time frames. All right, so as I said, the first touch of an SR level will always give the best reaction. When you see these levels aligning with a CC, which is a golden zone, and or a point of control, a value area high or a value area low, you have good confluence at that level, and that should be considered as a level of interest to either long or short, depending on if it's above or below you. Okay, and then of course the more confluences you have around a level, the stronger that area is going to be. Whenever price loses a support/resistance level, expect a SR flip. Okay, so we're expecting an SR flip if price pushes through a level. So what I mean by that is, if we have support and price pushes below it and back tests it as resistance and makes a lower low and a lower high and a lower low, well, we simply just class that level as an SR flip. Okay, and vice versa. Whenever price pushes through resistance and back tests it as support, we can class that level as an SR flip. So if we have resistance ahead of us, above us, price pushes through that resistance, back tests it as support, higher high, higher low, and another higher high, and keeps on moving, then we simply just class it as an SR flip. Okay, so as I stated, confluence is important when you're wanting to trade off of these levels, and context and market structure is very important as well. Okay, guys, so what I'm going to do is I'm going to hide this information and we'll revisit this once we get to the end. And what I'm going to do now is just show you some examples. So before we start, let's read through this one more time. When marking out support levels, we look for a red candle followed by a green candle. when looking for resistance levels, we look for a green candle followed by a red candle. Okay, so let's go into the chart and let's take a look. Here we have the monthly time frame. So what we can do actually, we'll revisit that when we're done here. So let's just start marking out these levels. So let's start with resistance. So as stated in the example that I typed out, when we look for resistance, we're looking for a green candle. It doesn't matter what size it is. We're looking for a green candle followed by a red candle. Yeah. So here we have a tweezer top. This is what we would mark as resistance. And now I've already created templates for these horizontal levels, and all you would need to do is just, come over here. Let's start over. You come over here, you get your horizontal ray, put a star on it so it comes into your toolbar. Once you have that horizontal ray, come and grab it down here, place it there, and if you double click on that level, you can type in monthly level because we're on the monthly time frame. And when you want to save it, just hit your template, come over here to save as, and then you type in monthly level. You can see I already have it there, and then just hit enter and it will save. I'm not going to hit save because I already have it right there. So that's how you would do that when you're wanting to save your template for your horizontal level, and you can do the exact same thing for the weekly and the daily time frames. Okay, so we have our first monthly level of resistance. Second one we would do is we're looking for resistance, so we're looking for a green candle followed by a red candle. I see a tweezer top, and that is monthly resistance. Now, one thing that you need to always remember is whenever we're pulling these resistance levels, you never pull them from a wick. Okay, you see a green candle followed by a red candle, we're not pulling them from the wick. We always pull them from, excuse me, sorry about that notification, we always pull them from the body of the candle. Okay, from the body. All right, so now we can mark out another level. So we did resistance. Now let's look for two support levels. So when we look for support, we look for a red candle followed by a green candle. So this is a good example of what I meant by the wicks. Sometimes you're not always going to have these wicks, guys. Sometimes one candle won't have one. Sometimes one candle will have a tiny one. Okay, they're not always going to be the perfect tweezer, but as long as you can understand and remember that what you're looking for is, when you're looking for support, a red candle followed by a green candle, and for resistance, a green candle followed by a red candle. Okay, the tweezer tops just help you identify them easier, but they don't always have to have these long wicks. Sometimes the wicks can be short, just like the example that you see right here. Okay, and here's another example of a monthly level that I believe will end up closing this candle and becoming support. So we'll just mark this out for now and try to stay a step ahead of the game. So I see a red candle followed by a green candle. So pay attention to the wicks, right? This one looks more like a tweezer a little bit. This one's shorter, this one's longer, but nonetheless, it's still a monthly level of support. Okay, so whenever price is above the level, it is support. Whenever price is below the levels, we look at them as resistance. All right, now let's do one more and then we will switch our time frame and go to the weekly. So we have another level, we're looking for support. I see here a red candle followed by a green candle. So what I do is I take my ray and I put it right at the body of those candles, and there we have our support and resistance levels on the monthly time frame. Okay, now we are on the weekly time frame, and we're just going to repeat the same exact process. What I've done is I've taken all the monthly levels and I've put them in a folder. You can see that we still have our monthly levels charted out. I placed them in a folder just here, and I label that folder levels, and I hit enter and I save it. If you want to do this, all you need to do is, let me just take one of these out. Let's just take all of them out, and let's just start from the beginning since you didn't see me do that, just in case you don't know how to do this. So these are all of our levels that we had marked out, and we can find them here in our object tree. That's at the bottom right hand corner of our trading view screen. Now what we do is we click the level and we hit create a group of drawings, right? So we have our folder now, and we just mark that as levels. Okay, and you can just drag them inside of the folder and they'll all pop right in there. Now if you don't want to waste time just doing one at a time, all you need to do is click one of them and then hold shift and click another one of them, and then you can select them all and just drag them all in there at one time. All right, So now let's go ahead and mark our weekly support. So let's remember the rules here. When we're looking for support and resistance, we are looking for, as support goes, a red candle followed by a green candle. So there is weekly support. So I mark that with my horizontal ray and I label it weekly. Okay. Now let's do another one. When we look for support, we're looking for a red candle followed by a green candle. So here I see another support level. I mark that one out, weekly level. All right, now let's do some resistance. Here, for resistance, I'm looking for a green candle followed by a red candle. Here is weekly resistance, just above us. So I get my horizontal ray, I mark this as weekly resistance, weekly, right there. Okay, so let's do one more on the weekly time frame and we'll move on over to the daily. So here is a good example of what you do not take. Okay, so although this was a green candle followed by a red candle, what we see here is that we have 3 of them here. If I put a horizontal ray here, remember what I said about a level being tapped already, it becomes weak. Well, look at here, as this was a level, this one immediately came up when this week opened and it tapped the level and then it got the reaction all the way down. So this level I would not mark as resistance because it's already been tapped, but I see one right here that has not been tapped. Okay, green candle followed by a red candle is resistance. So I mark that as weekly and we are done. Technically we can just throw another one up here just for good practice. I see here a green candle followed by a red candle, and that would also be weekly resistance. Okay, so I'm going to do the same thing I did with the monthly levels. I'm going to hit shift, click, and click, and I'm just going to drag it into the folder and lock it in so that when I come back over here, if I accidentally click it, they won't move anywhere, they'll stay right in place. All right. Okay guys, so now I'm on the daily time frame. There's a whole bunch of daily levels on this chart. We're not gonna go through every single one of these and mark them all out, but we will do a few of them because it's gonna be a little difficult to see with these small candles. So here we go, let's do this. Remember the rules for when we're looking for resistance. Let's start from this top and we'll work our way down to this bottom. When we look for resistance, we're looking for a green candle followed by a red candle. So I see a little daily resistance right there, and I'll just mark that as daily. Okay, now we have another one. Has this one been tapped? Let's take a look. I see a green candle here followed by a red candle. Let's just place it right there and see if it's been tapped already. Ooh, it's been tapped. It's been tapped right there. So I'm not going to take that one, but rather I would take that one right there, because I see a green candle followed by a red candle. That tells me that is resistance. So next one we'll do is, I think this is one right here. It looks like it may have been tapped. Let's take a look. But this one right there, the top from that 30K range. Let's see, let's zoom in a little bit. Has it been tapped? It looks like it's been tapped, but it has not been tapped. But just as this is very close, so you know, I'm not quite confident in this level being marked out. So what I'll do is I'll just take that one instead, because you can see here that this one didn't come as close. I don't really trust that one. I think there's liquidity up there, so I'm not going to take it, but rather I'll take that one right there, and that is going to be a daily resistance level. Okay, let's do a couple of supports. So let's go to local price action. And let's just look at this uptrend. Let's see if we have any support in this uptrend. So I can see one right now. So remember what we say, when it comes to support, what we're looking for is a red candle, followed by a green candle. So I take my horizontal ray and I just place it right at the body of that candle and I label it daily. Okay, there's another one, red candle followed by a green candle. They have the tweezer impression. So I take another daily level and I put it right there at the bodies of those candles. Now, lastly, I see one more down here in this trend and I see it right at the bottom. So we have a red candle followed by a green candle, and that is daily support. So what I'll do is the same as the monthly and weekly levels. Hit shift, I hold shift, click the level at the top, click the level at the bottom, and drag it into the folder, saving yourself some time, and lock it in. Okay guys, that was a quick video that I wanted to do, showing you guys how I mark out support and resistance. Let's zoom out to the monthly time frame and just see them all together. So I turn them off, turn them on, and there's all of our levels together. One thing I want to say is the more levels that you see together, like for example this one down here where it's the monthly on top of the weekly, that tells you that that's a very strong level down there. Okay, so we'll start learning on how I build confluences with these levels a little later on. This is just a video to show you how I mark these levels. So watch this video once, watch it twice, watch it 3 times, and go to your chart and start practicing, and you'll start to see these levels opening up to you, and you'll be able to identify them just as I do. All right, so let's to wrap it up, go through the rules one more time. Let's get it all in there. All right, so horizontal support and resistance. Let's just do a review. So what we're looking for are tweezer tops and tweezer bottoms. When marking out support levels, we look for a red candle followed by a green candle. As you have the example, oops, let's just get that just right. Hold on, sorry about that. Let's get it just right there. Okay, when marking out support levels, we look for a red candle followed by a green candle, like you see in the example here. When looking for resistance levels, we look for a green candle followed by a red candle, as in this example here. Once a level is tapped, the strength of that level weakens. Okay, that's important to remember. I look for support/resistance levels on the monthly, weekly, and daily time frames. The first touch of an SR level will always give the best reaction. When you see these levels aligning with CCs, golden zones, and or point of controls, value area highs, value area lows, you have good confluence at that level. And I suppose we could add in when you see them stacked on top of each other, like the monthly and weekly level that we just saw earlier. Whenever price loses a support/resistance level, expect an SR flip. For example, if we have support and price pushes below it and back test it as resistance, therefore then making a lower low, lower high, lower low, what we do is we just class that level as an SR flip. Context is important, all right? And vice versa. Whenever price pushes through resistance and back test it as support, we can class that level as an SR flip. So if you guys have any questions about this video, about how I mark support and resistance, I prefer and I would just ask that you watch this video one more time, 2 more times, and then hit me up if you still have questions. But I think this is something that's going to help you guys tremendously. It's very simple and easy to apply. As long as you go out there and practice it on your charts, I think you'll get it just fine. So guys, that's all for me. Have a great day and happy trading. Cheers.